Sure, gents. Ke tshepa le le monate ish. Nna ke monate bafethu. Um, I just keep on sacrificing, guys. So here's the dollar. The dollar did set up strategy sa rona se it's more dollar index. So I just want to take you through my thought process as to how did I find this setup, or how do I go through when I approach the market. So here I see a momentum push. Just before that, I want to delete this Fibonacci and use this arrow. Okay, that arrow here is last week Wednesday's candle. This last week Wednesday's candle, guys, it created a high, and then for the rest of the week the market went down. The following day on Thursday, Friday, it closed down here. So this is a midweek high, or maybe you can say the previous week high on Toilet. So no, ke tlo nka high ya yona to this week. This week ke ya Monday. This is Monday. As you can see, there's a gap here with no volume. More, it's when the market is opening, when we for just 2 hours on a Sunday, when the market is when the rest of the world are still in Sunday and the market is now entering Monday. This is what happens. So I don't consider this in the momentum push. So without yapping anymore, I want to draw this Fibonacci from last week Wednesday's high to this week Monday's low, with Monday closing bullish and to the 50% retracement key level. So this is the key level, guys. This 50%. I'll mark it just now, just to let me fix. Okay, let me fix it on the hourly chart. Here I'm on the hourly chart. The momentum push is much clearer now. Let me just bring down the error. This push here, I wanna push you. Measure this Fibonacci retracement tool. I'm measuring this push. Actually, what I want to measure is the 50%. The 50%, right? That's the only level that I want to measure. So yeah, from Thursday, oh no, not from Thursday, from Wednesday's high, midweek high, previous week high, to this Monday's low, that is a momentum push, guys. So from there on, I want to mark out the 50%. Still on the daily chart, guys. I haven't went down. I haven't transacted down to the hourly chart for now. I'm still on the daily. I was just fixing the momentum push, the extension, guys. So from there I want to mark out the 50% key level. So from there to, let me just make it thin quickly. Yes, it's thin. Okay, mark it out quickly. Here it is, right there, right? No, I can't. So this one is already thin, so let me duplicate it and use this one. Just change color to orange. Orange get we have more leveling as 78.6%. More classic 50% here on the 79.0 or 78.6. That's where I'll put the orange one and name it my blockage. So price should actually, if it's going to violate the 50%, it should respect the blockage. If it fails on the blockage, then I know the market is reversing, because it will eventually cancel this momentum push, this extension. If the market goes up, it will cancel, but now I'm expecting the market to go down, right? So fine, I have my extension, my momentum push, I've marked out my key levels. Now the only thing that I'm looking for is a retracement to the 50%, and I had at the same time on Monday opened here, made a low, extended the push, and came back, made a high. With that high, it retraced to the 50% line. It retraced to the 50% key level. So with saying that, I am done on the daily time frame. The last thing that I'll only mark out is the weekly high created by Monday. Monday is the first day of the week, and it will create the first weekly high. So that first weekly high must be respected by Tuesday. So that is what has transpired, guys. So I want to mark it purple because it's Wednesday. Wednesday, I mark the purple vertical line. Fine. So I have Monday. I still have to mark out my weekly high created by Monday, right? And that I want to mark out with a red color. That because we are going bearish, we are going down. Just want to mark it with the red. Put it on the okay. The high of the green candle, guys, the high of the green candle. So now I'm done. Overall, I'm done on the when this happens. Overall, I'm done on the daily time frame. This is when I go down to the hourly time frame. Okay, sharp. So here I'm just going to delete this. Here we are on the vertical purple line, right, guys? We are on the vertical purple line. We are on the vertical purple line. So after the purple line, this side Tuesday, this is the side is Monday. So Monday came to retest the 50% and rejected. So where's my liquidity line? Here my liquidity line where it touched and closed. So it touched and closed below. This indicates rejection, guys. When this happens, this creates the first weekly high and rejection. So right here, let me just yeah, there we go. Yeah, this is how I want to look like ke di wiki batlo e bonale ka teng, guys. So more ke Monday it made a weekly high and then it rejected same time on the 50% key level. It rejected closed below, but the daily candle didn't close below this line. Okay, let me just do like this. Oh no, not that. I want trend line. Yes, this is what I want, a trend line. Yeah, oh no, I wanted to make it straight, so okay, it's a bit straight. Yeah, straight, move that aside. So here more, let me just make it a skeleton. I wanna let me I want a skeleton. So I want it. So more, it created a high. Price came here on a very lower time frame. Price came here, made a weekly high or a daily high, and then rejected. So on Tuesday I want to retest this high. Guys. And now this happened in the early hours, guys. As soon as Tuesday opened, it retested, made a double top, and then fell. So this is the kind of setup that I want, guys. So sharp. And now here also I'll come back to this area, but for now I want to talk about this here. This is where we are, where it closed here. This sign is the liquidity level, because here, as you can see, this is the momentum push. Here it broke some support. That's why it came to test it as resistance. When support is broken, it changes from support to resistance, or when resistance is broken, it turns from resistance to support. Blah 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 blah, yappy. Yeah, now I'm catching my tongue, guys. Like, English is not my mother tongue. So yeah, liquidity line A is part of has a point on the momentum extension and has a point on the exhaustion part, where the market is trying to gain some breath before going down again. So that's how I determine this liquidity line. First, 1, 2, 3, until after making a daily high or weekly high. So tomorrow I'm expecting on Tuesday, I'm expecting the market to break this liquidity line. By breaking this liquidity line, it's either we're going for the weekly high or we'll be going to some area here or up on the top or to this area value, the 79%. So I'm talking about an area somewhere here because they can be fair value gaps somewhere here. Then the market retests them before actually going down. The market actually retests the fair value gaps before going down, guys. So fine. Here, as I was saying, I expect the market to break this liquidity line, retest there. So it happened around about the same day. Same day, it made a weekly high, rejected on the 50% key level and closed below it. After that, it went up. Okay, fine. Now, what's funny enough is that this happened now. Divergence on the other side on the chart. As you can see, let me do a skeleton. This is a skeleton, the line graphs. So as you can see, guys, that somewhere somehow, yes, it made a head and shoulder pattern, but here I'm trying to focus on this side actually before we get into Tuesday. So as you can see, guys, 1 2 1 2, that's an information with divergence. So for me, for the market retesting that part, I want to go down to a lower time frame, which will be now my entry time frame, which is the 5 minute. On the 5 minute time frame, I'll be looking for further divergence. So I'm just going to delete that one just to make it clear. On the 5 minute, I have divergence of the 5 minute. I definitely have divergence of the 5 minute, guys. So after here, the 5 minute, I want rejection, a strong rejection indicated by a fair value gap to the direction of my sentiment. So here, since we're going down, going bearish, I'll be looking for a bearish fair value gap. So zooming in here, I see excuse me, I had to sneeze. I see the gap here with this week. By a fair value gap, same time also not forgetting, and we have to notice that the market is really going down as it moved from overbought to oversold levels. As you can see, guys, that's what happened, guys. So that's what I was supposed to do, but I couldn't execute because I was too scared. Actually, I involved my emotions into the game, guys. I involved my emotions into the game. Hola, malum. Sleeping is just involved as involving feelings into your game, guys. Emotions in the game are not wanted. Sleeping is considered as emotions because you're feeling tired, and now the market is marketing when now you're feeling tired. The market is going to move. So yeah, guys, I was sleeping, the market moved, and now I tried to hop on a moving train, guys. So that's how it's supposed to trade. So here, guys, Oh, guys, I have a cramp. Oh, God. So, yeah, this is what I was supposed to do. Let me just switch on my trade history and see the fuck up that I did. Huh? What? Guys, where's the arrows? Did it switch on? Trade history, show trade on, show trade history. Yeah, it is on. So, where's my trade history? Oh my god, I should have trade history here today. Well, am I? I think I'm at a wrong. Okay, let me just do like this. Go to, yeah, I'm on a demo account. So let me go to my real account. Fuck, this was. Fuck. At the end of the day, guys, I entered in at a sweet, maybe you could say I entered in a sweet position, but still I wanted my position to be there, not here. And look at the fuck up that I did. I lost, and yeah, the market went, guys, without me. Could have made money, but I couldn't. Why? Because I involved emotions. So basically, yeah, that's the strategy, guys. So now, since I blew my account, I can't even trade this opportunity. Why am I saying this opportunity? Because this is it is retracing a fair value gap of yesterday. This is a fair value gap of yesterday's fair value gap, and now I am going to make it out. As you can see, this is what I'm having. So now what I'm going to do is go to a much lower time frame. Am I get is this divergence that I'm seeing here? Wow, this divergence, it is kind of diverging. Yep, the divergence. Yeah, 1 hour. Yeah, but like you, oh, ke divergence ya 1 hour. So ke again ke go 5 minutes ke batla fair value gap, another fair value gap maybe here, and yes, it is. Oh god, yeah. So yeah, that's where the market is right now. So here I will take a sell, but now I have no money because I'm not disciplined. Let me go to the demo. Yeah, I think I should execute on the demo and see what happens. Looks like it's failing, but for me, I can't fail, guys. Can't fail. Let me just go and execute on the demo account and then end the video. Sell stop, yeah, just right there. Yeah, filling 21 orders, then fine. It would the same time. Yeah, I have almost sale. Okay, fine. So when I later would see what transpired. Oh, my stop loss. Stop loss is about 70. It's about 70 points. 70 pips plus spread which is 60, so it's 130. So I would like to put my stop loss, then you're good. We'll see.